is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hello, can you hear me? This is Hall Martin.
Hi there.
Oh, yeah, there you are. Good. Yeah, good to catch up with you. How are things going there for you guys?
Yeah, tedious. Fundraising is tedious. No question. In the diagnostic space. Yeah, so that's really special. Yeah.
Well, that's great. So are you still raising funding for it?
I talked to people from Arabian states.
Middle East, Qatar. Yeah, we have people that work the Dubai Qatar circuit all the time.
Looks like they have too much money.
They invest. They write checks. Of course, they want to see very high gains too. It's not free money.
Okay, this is what we didn't talk so far, but I don't know yet. So we'll see. They are also looking. So they want to see IVD approval. Yeah, and they don't have much experience in diagnostics. Yeah, so
okay.
At least I talked to a person who could follow. He knows cancer a bit. Yeah, so also a few technologies there, which is something. Yeah, so because you don't start from scratch there.
Okay.
It's not easy. I think I told you we were selected last year in Heidelberg for a pitch out of 140 companies in Europe. And I came there, gave a talk. They said it was a very nice talk, but none of those 40 VCs invested into diagnostics. Yeah.
Well, a couple of thoughts in looking at your deck there. Number one is I couldn't quite figure out how much you're raising because there's no number in there as far as dollars or euros or what have you that you might want to raise. What are you raising right now?
We are raising 6 million.
6 million. Okay.
6 million. So the value of the company we think is about 25 million. Yeah. And so we're raising 6 million. And this is for introduction of the first products.
Right.
Yeah.
So what we coach on is when you raise a substantial amount of funding, more than $1 million, in this case, 6 million, you want to break that down into 3 rounds, and you want to give a low valuation to the first round, higher to the second, even higher to the third. So if you think you're worth $20 million, I would be putting the first round at, we're going to raise $1 million at $10 million valuation. Then we're going to raise $2 million at a 15. We're going to raise another $2 million at a 20. And you can figure out what those numbers are. But what you do when you do that is you break it down into steps and stages. And for each step, you put some part of some milestone that we're going to accomplish. With 1 million, we're going to do this. With 2 million, we're going to do these things. With another 2 million, we're going to do more. And as we're building traction and clinical proof and trials and so forth, we can raise our valuation because we're getting proof that it works. And that's what VCs look is they want a better price. And so my rule is they can have a better price, but they have to go first, not last, but first. And if you were saying, keep the valuation the same all the way across, well, guess what? We all want to be the last one in the deal, but we can't all be the last one in the deal. Someone's got to go first, and you have to give them a reason to. And a better valuation is one way to do it. And then if you break it into these smaller chunks, like $1 million, 2 and 2, you can run what I call deadline campaigns. You can go and say when we're at 700 raised so far, we say we're closing in 6 weeks. And we have 300 left, and the interest and committed, those who are saying they're interested, is $2 million, something like that. So you show that there's demand for that money that's left to be raised. There's others that are out there. We've already raised a big chunk of it. It's about to close. And if you don't make it in, you have to go to the next round. You don't mind paying more. It'll be a higher valuation. It goes up by 50%. And so that gives people pause about waiting and just thinking is that now there's an incentive to come in now because it's only going to get more expensive later. So that's one fundraise strategy you may want to consider is breaking it down because some people just get scared at 6 million. I can't do 6 million, but I could do $1 million, or I could be a part of $1 million raise, especially angel investors work better when they're smaller rounds and we've broken it down to easier steps to go through.
Okay. No, that's certainly something we can do that we lower the value of the company first, so they get a higher share, and that's good. But what is the trick? What did you say to get more momentum into it? So if we want to have the first million, what are good arguments here to attract them? Give them a deadline. It's not that easy to press them forward.
Well, we have to show that we have compelling technology. Things are going very well. Here's the evidence that it is doing well. And for sophisticated investors, you can talk about the science. For non-sophisticated investors, people who don't know your space, angel groups are, they're good business people, but they really aren't scientists. They don't know the space.
Yeah.
And we can spend half our presentation trying to educate them and give them a degree in this space, but that can be still a daunting challenge to do. And so you want to come up with the layman's version of your presentation so people understand, we're making good progress here, there's good value, but you don't have to be a scientist to understand or appreciate it. So we have to simplify it in a way that people get into it, and they analogies and metaphors and things like that can be useful for the layman's. If you're talking to VCs, they're sophisticated. You're talking to angels, they're typically not. Some angel groups are, but many are not. And so we just need to get to show the business case for it as well. You have a business case in here. I think it looks interesting. I don't know if it's compelling. What I find is if you're in neurology or oncology, you don't really have to make the business case. There's money there. Everybody knows there's money. But if you're in anything else, you have to make the case that we can make good money with this product. We can sell it for a high price. You could have recurring revenue. You could have a razor blade model. You could have a good margin, which means it's very cheap to build, but you could sell it for a very good price. And these are the things that get investors excited, is we're building something that we're going to be selling, make good money. So when it comes time to sell the business, of course, people will want to buy that and pay a nice price because they're making good margins on it. And I don't know if that comes through in your current deck. I don't really get a sense this is a big money maker. I think we can make some money, but it doesn't look like big money to me. So we had to figure out how to make it look more impressive on the money side, because once you make the technical case, you now have to make the business case.
Okay, that's a good point. I have to look what kind of slides I sent you. But one of those possible investors, she came back and said, so when do I double my investment? When do I have 5x of my investment? That was good. So I made a slide of our return of invest. Yeah. And I don't know yet. So what the answer?
Well, the exit slide is not very clear here in the presentation. I don't know who would buy you or why they would buy you or how much they would pay. But I find in this space, the exit is all important. In fact, when we ask about your customer, we're talking about the pharma company that's going to buy you, not the patient that's going to use or the clinician that's going to use the diagnostic. We're really talking about the pharma company. And the best presentations are the ones that say, I'm raising $2-3 million now, and I don't have to raise any more money between there and the exit. And from there to the exit, it's going to be 24 to 36 months. It's just 2-3 years before we get to an exit. So it's a short window. It's a clearly known path to who's going to buy it, why, and some idea about how much they're going to pay. I don't really see that in the slides as far as the exit goes. Who would pay you for this deal? And you always want to choose the earliest one, especially angel investors fear dilution. If I'm in this deal 5-10 years, I'm probably going to get diluted by follow-on raises. And so they're not interested. So they want a short path. VCs, they'll go a longer path, but it's got to be a very, very substantial exit as well. So I didn't see the exit come through that strongly in the deck.
Yeah, that's right. It's different in diagnostics, And here we usually, if it's coming to an exit, you offer it not really, sometimes pharmaceutical companies, but more diagnostic companies.
So how does the investor get paid back in that scenario?
You have, for instance, last year there was an interesting buy was a pretty much unknown company. It's called Haystack Company. Was bought by Quest Diagnostics in the US, and they paid $400 million.
Yeah, it's a good exit and so forth.
You're right. We have never heard about his company first. Yeah, no, we had seen no publication, nothing. And we know their technology now. Yeah, and we think we can certainly compete with this. But somehow they had a very good marketing or a good approach to such companies.
Yeah,
Because
they
in
do.
other cases also quite high. Yeah, also at least 200 million. One is 8 billion. The most prominent one is Braille. You may have heard about this, but that's the European committee. They stopped the takeover of Braille. Also, the US stopped it now. And it's not a good, turns out more and more it's not a good technology. But there is a lot, because there's a huge need in cancer diagnostics for cancer care, but it's not really realized. Yeah, so the VCs at least. And that's a good point, because I have now 2 or 3 private investors here who need to participate to really lower the value of the company. Yeah, making it. That was a good advice. So we'll see.
Yeah, no, that's a good point there.
VCs in the back, and what they say, what they claim, I don't know. I haven't heard there. They say it was a good echo there from the VC crowd, but I don't know. I didn't hear much, and so
Okay.
the usual way they just don't shut up.
Okay. No, that sounds good. So if you need help with the fundraise, we can help. At 10 Capital, we help run investor relation campaigns. We have online events. We now have a hybrid in-person event. We're starting February 7th in Austin. We got 20 investors signed up so far. Come out and hear people pitch. And then we have people zooming in to watch the presentations as well. And then we're also moving to do in-person events where we bring 10 people together for a dinner and we go through the presentation with them. And we do these in Austin, Dallas, Bay Area, Chicago, New York, because getting investors together for a evening is not hard to do. There's a meal there, they get to meet other people, and then we go through the presentations. But we're basically $3,000 a month for a 3-month commitment for doing our program, and then there's no back end fee or success fee. It's just that. So if you're of interest, I can send you more detail about how we work.
Yeah, I think we talked about this. Yeah. I mean, you sent me some links for there were recently some.
We sent you the Austin hybrid event links because we just came out with that. It's coming up February 7th. So if you wanted to check it out on Zoom from there in Germany, you can, or we can, if you get a chance to come to the US, you can meet some of these investors as well. When you met these last investors, I guess you said in Heidelberg, do you ever come to the US for investors, or is it just in Europe?
I participated in the virtual meeting in San Francisco, and actually was good. So I got 7 or 8 responses there, and it's still open. They think about what to do. But usually, I mean, we show up in the US virtually, so to say. If there is really a very good chance, I would certainly travel.
Okay. All right. Well, very good. Well, like I say, let me know if you need help with the fundraise. Appreciate your taking time to talk today. Did you have any questions for me?
Not yet. Yeah. Well, I think about what you said, and then I will. Okay.
All right. Very good. Have a good one.
Bye.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.